Welcome to Invest. We talk about investing, finance, and professional development. So current time of 11:28 a.m. on Eastern Time on October 1st on Saturday. Hope you guys had a good week and also a good weekend so far. With respect to overall crypto market and the equity market, obviously the equity market is closed, but on the future side of this perspective, Dow Jones, S&P, Nasdaq, Russell are all down at the moment, down about 1.7% to 1.5%, in that spectrum, foreshadowing that Monday will be a red Monday opening, capturing and initializing the month of October. But we'll see, right? Today is still Saturday. We might see some media affectation coming from the outside of the world. But let's take a look at what the current status on the media affectation front. And sorry again for not posting in the last 2 days. I was in a conference, and I live like relatively far away from the city, so I have to like wake up really early every single day. So it's hard for me to film myself, and do all of that, and put on a suit and stuff like that and commute back and forth. So apologies for missing the 2 days. I do understand that the last couple of days has been relatively, negative, especially on the equity side. But on the crypto side, it's relatively static. And on the media affectation front, I'm just looking at some of the news that's in front of me, and we could take a look at it together, shall we? It seems like the news front is red across the board. The Fed is breaking things. Here's what Wall Street's on edge as risk rises around the world. This is more just like fear mongering. That's CNBC's trying to do, but I don't blame them. I mean, the Fed's or Jerome Powell specifically, he has not really performed anything proactive so far with respect to how we're trending with the macro market, right? It seems like we're just going with the 75 basis point every single time. But in terms of like the tactical nature of the rate hikes, right, in a more of a systematic approach, it seems like what the Fed is planning on doing is really watching the needle on how the rate hikes will subsequently correlate into the mitigations of the inflationary pressure. So it seems like we just have to rate hikes and incrementally or progressively, if you may, or aggressively, depending on how you think about it in what perspective, until we see some sort of a normalization, right? In addition to that, we're also seeing some weights coming down on the Facebook stock. Obviously, ever since Sheryl Sandberg departure, Facebook has been, suffering, with the intensify type of competition coming from TikTok, which is, has been on everybody's usage and utilization nowadays on the consumer front. Taking over the market share, so which subsequently drive users to flee away from it, with respect to the ad spends, but also with respect to the marketing and advertising dollars, sales also drop subsequently. And just looking at some other news, it seems like obviously in addition to inflationary pressure, you're seeing some negativity around uncertainty and geopolitical risk, coming from the market, not just domestically but globally. And yeah, just across the spectrum, a lot of a mixture between like the war cultivation with Ukraine and Russia, COVID in China, some Cold War between U.S. and China, obviously, and obviously the domestic front, and obviously the overseas on the international side of the house as well on fighting inflationary pressure globally. So that's pretty much on the news front. So it's just across the board negative, ending September with down basically 9%. So looking at the schedule ahead, so we understand that, and this is something that has happened historically, is that the month of October has no FOMC meeting. But we're still going to get the verbiage from what happened in September, which we had the recording and the transcript that's going to be released. But we do have a CPI report that's coming out on October 13th at 8:30 a.m. on the Eastern Time. So technically, we are, about like a week and a half out, right? Today is on the 1st, which lays on a Saturday. But the market technically doesn't open until the 3rd. But we are already, indicating some sort of negativity coming. And also with respect to the calendar, I'm just looking at the 4th and the 5th is the Yom Kippur which I don't know if this has anything to do with it, but there will be some. I guess it's gonna be a long holiday for the Jewish community, obviously. So let's just dive right back into the technical without wasting more time. Today would be a good day to subscribe to our Patreon, by the way. But I have actually, worked with Patreon on to revising the subscription payments. So, historically they used to charge my patrons every beginning of the month, but now I have actually revised that structure to be you will be charged whenever you sign up on a month-to-month basis. So you don't have to kind of think about, oh, today's the first, I have to sign up for it. You can actually sign up anytime, and the cycle will be repeating based on the cycles that you have signed up on. So for example, if you sign up on October 5th, let's just say, your next charge payment would not lay on the November 1st. It will actually be lay on November 5th. So 1 month cycle from there. So that will eliminate a lot of confusions and obviously, some frustrations, right? So let's just dive into technical without wasting more time with respect to recording time of 11:34 a.m. on the Eastern time. We are still at the same level that we've been gliding around, right? You can see that we clearly have this golden cross that we've formed, but relatively stale, right? You can see that we're still kind of getting blocked at the 41 out of 70. And on the weeks out, you can see that we are still being mitigated because of the fact that we still need to cross down, and you have this like M shape, right? This double head, right? Basically rejecting higher level. So which is something we don't like. So that means like we should get some more volatility, and I think it makes sense as we approach obviously the 13th of October with the CPI report depicting the September, right? And then with respect to the monthly, it's still relatively okay, not too terrible, but it's gonna need some landing weeks out until we recuperate and have the bull run from here. And then on Bitcoin, it's something similar. We could see that on a weekly, getting crossed down, getting crossed up, it needs to be crossed down, and also we have a double heads. On a monthly, you still need to kind of consolidate, find a landing path. On a daily, you are still, it's bearish now. You could see that clearly we need to kind of cross down before we cross up. So seeing 17,500, as we approach closer to the CPI report release, is not going to be a surprise, right? So it seems like daily is negative, weekly is negative, monthly is positive. So Bitcoin is going to see some more volatility coming in comparison to Ethereum. Just look at the index front, the stock market specifically. You could see that clearly. Let's take a look at S&P, which is a good indicator. I would say the equity side is quite oversold on a daily. So I think buying around these levels across a lot of the stocks would make a lot of sense. We could take a look at the specific ones, but the weeks out, we still need to kind of find ways. And it seems like we have unfortunately broken the resistance level of 360. So seeing some lower level, but not a significant amount of, because right now we're at 36 already. Until we recuperate. But right now, with respect to the monthly, we are still, large separation. So it's still bullish from here. And across the board is relatively oversold. So the equity market should ideally see some rebound shortly. And this is applicable to all the other ones. I don't know why Weibo is not showing it, but across the spectrum it looks quite similar. And just looking at Tesla, you could see that we are still consolidating. Months out is quite bullish. Let's see a weekly. Weekly looks quite bearish, and also on a daily. Daily looks not terrible, but again, right, trading very similar to Ethereum. We should see some short-term normalization. And then look at Apple as well, just like taking a look, right? You could see that we've clearly crossed down on a weekly, so this is good. We've solved that one question. Daily, it looks not terrible. Large separation as well. And then on a monthly, yeah, I think Apple is actually not a terrible buy at the moment. Like based on the setup right now, it looks quite consolidated. And 138 is actually not terrible in a valuation perspective either. Look at Meta, which the news talk about is like flying off the cliff. Monthly looks bullish. Weekly looks bearish, not significantly because we are relatively oversold already. But buying around this level, DCAing for long term is not terrible. I mean, I don't think I don't think Facebook's really gonna be collapsing. They still have, you know, a lot of subscriptions, a lot of top line revenue that they generate. It's just that media is like try to, you know, squeeze them. And also on the daily, you could see that with double heads. So, oh, that was a mistake. So you could see that clearly we have bounced from the 27. We're quite oversold with large separation. So Meta is actually a buy right now, I would say. Look at lastly Baba. I don't want to go into much to it. Daily looks quite bullish. Weekly looks bullish too. Monthly looks very bullish. I think Baba is also a buy. So again, confirms with our overall market sentiment. You know, the stock market is definitely looking for a rebound shortly. It makes sense because of the Santa Claus rally. So I do like the stocks market across the spectrum. But the crypto market is going to have some, you know, short-term volatility coming as we get closer to the CPI report. So something to think about. So appreciate you. Have a good Saturday and sorry for not posting. But I'll catch you guys later. Take care. Bye.